Week-over-week inventory stayed about the same this week with just 4 more available homes overall. We did see new listings breach the 100 new threshold for the first time since prior to the holidays, indicating that inventory will likely continue to rise as we approach spring. Overall pending sales also saw an increase this week, with 433 pending, up 6% from last week's 407 pending. This indicates that demand is remaining relatively stable. I expect to see demand continue to rise modestly as the weather improves. We had 25 listings that were cancelled, taken off market this week, which is still nearly twice as many as we saw this same time last year. A number of these will likely be relisted after finding a new agent, making some repairs, and/or reducing their price. This time last year we had almost half as many homes available, so it makes sense that there is the possibility for more listings to come off market. However, this contrast shows how much of a different market we are experiencing to what we saw just last year. Average days on market appear to be coming back down, referring to the ADM for active and pending sales, and that trend is expected to continue as price become more realistic. However, it is important to note that if you're looking at a 12-month history of sales, the ADM is still less than 30 days, this will continue to rise. We are poised for another strong spring selling season, as mortgage rates and prices level out. The average mortgage rate for a 30 years fixed is now 6.12%, which is basically the same as last week's 6.09%, but still nearly an entire percentage point down from the peak of 7.08% last November. The Fed has indicated they will be continuing to raise the Fed rate this year as well, but it will be at a much lower pace than last year. We are hoping this leads to a stabilization of mortgage rates this year. Source: www.barksrealestate.com